Good morning and welcome to another edition of the Economy and Politics Show, where we discuss development in the socio-economic space as it affects the populace. Today, we're looking at the banking sector. As you know, the banking sector is very critical to any economy. From activities that involve depositors to customers to even shareholders, whatever happens in the banks is of very important view and interest. We'll be discussing strengthening the banking system in Nigeria and assessing the Central Bank of Nigeria's regulatory steps. As you know, any step taken by regulators on the banking system creates a lot of awareness and interest in terms of stability. We need to have this conversation is Mr. Marcel Okeke. He's a former senior economist for one of the leading banking groups in Nigeria and CEO of Mascot Limited. Nice to have you, Mr. Marcel Okeke, joining us virtually. It's been a while, but nice to have you back to have this conversation on the banking system and financial services industry.
Thank you, Mascot, and thank you, Brusha, for having me again. Thank you.
Thank you very much. Let's first begin with the Banking and Other Financial Institutions Act, BOFIA, which was signed last year by President Muhammadu Buhari. It gives sweeping powers to the banking regulator, the Central Bank of Nigeria, and some groups, think tank groups, had sent their concerns last year about the legislation which was signed despite their concerns about the overreaching role it gives the CBN. But from your assessment of this mandate, how does it position the banking regulator CBN, and do you see any overreaching role in this regard?
Thank you for the question. Well, what you will understand is that any piece of legislation, such as BOFIA 2020, will always have, its good sides and bad sides, depending on who is looking at it. Okay, there was clamor for the amendment or updating of the BOFIA 91 with subsequent amendments, 1991 with subsequent amendment that is not in tune with the realities of the 21st century or this 2021 going forward. So and in time the National Assembly worked on that piece of legislation and brought it to what it is today. And the president, like you said, accented to it in late 2020. Okay. The truth is that the CBN really needed more muscle to deal with issues, especially new dimensions of issues, in the financial services sector. If you talk about something like cyber crime, cyber security, okay, in the previous BOFIA, not much was said about it. And so in the new one, a lot is said about it, empowering the CBN to do whatever it can, to contain, the impact of cyber crime and deal with cyber security in the system. That is one. Two is that it has given the CBN, yes, some extra powers that some people will be afraid of. For example, Section 18 of BOFIA 2020 imposes, some kind of fine to the tune of 10 million, or 3 years imprisonment on any director, manager, or officer of a bank who fails to disclose his interest in any credit facility. You understand? Yeah. And between me and you, I must tell you that these people they mentioned here, many of them usually have interest in credit facilities. But now that the CBN is empowered by this new provision, it means that everybody should be more careful. Because if you're looking for any facility, time was, I must say, when all the officials in the banks where you're looking the facility from, any table that your document passes through, each one of the officials there will want something, for himself. It used to happen like that. It used to be like that. Yeah. So, but with the BOFIA 2020, if any person is found to have interest in any facility like that, you have 10 million, fine, or 3 years imprisonment. So things have to be done now professionally. That is one. Two is that there is also a provision for bank CBN staff or bank examiners or inspectors to be attending management and board meetings of the banks. Although this one is not yet being implemented, but I think should things, not start improving in the sector, you get to that point where the CBN will exercise this power and begin to appoint its staff to attend management meetings and board meetings of banks. I don't want to go yet into the issue of the first bank. If a central bank officer had been in board meetings or management meetings of the First Bank of Nigeria, whether the bank itself or the holding company, over these past 3 to 4 years, I don't think we get to this, debacle where the CBN, had to come up with the latest policy it came up with. So, by and large, the BOFIA 2020 is a good piece of legislation, and I believe that the CBN itself, conscious of its enormous powers, will also implement that legislation, with caution, so that it doesn't end up, rocking the boat, kind of. Thank you.
All right. I mean, you just mentioned the issues around First Bank, and part of the issue about strengthening banking stability was about the recent events around First Bank, where the Central Bank of Nigeria had to intervene in the leadership issues, bringing some stability there. Now, I just one of the issues raised around the decision to intervene in that regard was the concerns around corporate governance, bad credit, and, like you rightly said, insider loans, insider interest, and how it affects the banking stability. But let's look at addressing the powers and responsibilities of significant insider interest in banks to protect minority interests. From the actions taken by the central bank on First Bank, how can this be widened across the banking system to ensure that such incident doesn't raise head? Because anything like this creates a lot of concern for depositors, customers, and shareholders.
It's not an easy thing, because the Central Bank of Nigeria has to be practically ubiquitous. What that means is that he has to be everywhere all the time.
Yeah.
You understand? In whatever form, he has to be everywhere. Because here I mentioned, a section of the BOFIA 2020 that empowers it to be sending its officials to be at management and the board meetings of banks. But let me tell you this: do you know that over the past couple of years, there have been this provision for independent board members, somebody that is perceived or issued
Independent board member, independent director.
By the CBN, especially. So, but what has happened? The truth is that when you have this kind of provision, there is always a way or ways, in fact, around it. Because how do you get people who call independent, in quote? They are here Nigerians, so they are part and parcel of the system. And because when even they are on the board, they are in a minority. You understand? When it comes to decision making and so on and so forth. So it's not going to be easy, because when you talk about minority shareholders, for example, how many of them are on the board? And when you talk about minority shareholders again, you find out that the shareholders bodies, associations we have in Nigeria, again, are so weak, and there are so many of them.
Did you say they are weak?
You understand? They are weak. They are weak because at the end of the day, let me tell you, because at the end of the day, each one of them is in that group for what can I get? I'm telling you. So the necessary solidarity, the necessary synergy for them to now push to get the kind of good corporate governance they should get, they end up not getting it. In fact, let me tell you, there is a lot of, the more you look, the less you see. Because these people who are parading themselves or fronting to be leading these small associations all over the place, I am telling you, a lot of them, the leadership, Nicodemously, in quote, come back to these banks and strike some kind of deal before coming to AGM, before coming to emergency general meetings and so on and so forth. I don't want to go making confession here, but I am telling you from experience, from my exposure, in the industry. So you find out that the minor or small shareholders end up even sabotaging themselves, with the result that they end up, by what they are doing or not doing, gagging themselves, and they are no longer free, to push for their rights the way they ought to. So meaning that these major shareholders just keep on doing their own thing, and that is what you have seen, in the First Bank case we are talking about. You understand?
Yeah.
So that's what we're saying. So where was the independent shareholder when we got to this point? Where were the minority shareholders over the years? We're talking about 1, 2, 3, 4 years ago, when they entered into forbearance and liquidity support from the Central Bank of Nigeria. So really, like I said, for CBN to do anything going forward to properly or to any extent cater for the interests of minority shareholder, it practically needs to have to be everywhere at all times. And how they work out to do that, I mean, it's up to them. Thank you.
Mr. Marcel, historically, when you look at, for example, in the 90s when we were just teenagers, trying to understand the reason for the Abacha intervention and the failed banks tribunal. I remember when bank CEOs were jailed. You know, it created a lot of scare. I mean, bank CEOs were jailed for making banks not sustainable or stable. I mean, this is why, to a very great extent, Central Bank of Nigeria must develop that surveillance measure, working with the banks, risk management and surveillance to ensure that this kind of incidents do not occur and affect stability. Because what happens with the approach to First Bank is very critical and must be the approach to all banks to ensure the stability, protecting minority interests, and also ensuring that no insider impacts the finances and operations of the banks.
Let me say here that I agree with you, but I want to use this opportunity to point out a recent directive by the Economic and Financial Crimes Commission, where it now requires every employee of all the banks to declare their assets. You understand?
Yeah.
This, when I was approached by some media houses to comment, I held this decision. I said it's a great decision. And that all bank employees, because when we say bank employees, it includes all the executive directors, managing directors, those directors, top level management, general managers, down the line. So when all of them declare their assets, you understand, and given the enormous powers conferred on the EFCC and all that, like the EFCC, unleashes its monitoring mechanism in addition to what the CBN will be doing. I think this will go a long way, to making everybody, operate according to the tenets of professionalism and ethics that that are required to professionally run a financial institution, especially a bank. Because it's a very sensitive institution, very, very sensitive. That if you tamper with, in fact, this one that is ongoing in First Bank now, I must say it's ongoing. It has its pros and cons. There's image challenge with it, even though it appears to have been settled. But people, wherever they are, who heard about it, some may have full information, some will not have full information, and they go on taking their investment and whatever decision based on all kinds of information. So that is why I think and I believe strongly that the CBN has to collaborate with EFCC and also other such security agencies, to get these people involved in line and be professional in their conduct, including the highest possible level of good corporate governance and ethics. I would say morality, ethics.
Ethics and governance is very important. Ethics and governance is very critical for the banking system. Now, when we look at the loan recovery with banks, when ProShare wrote its perspective on the First Bank situation, bad debts, and the way forward, which I guess you've also read it, is very clear in terms of the perspective on the need for loan recovery within banks to be regularly subjected to stress tests. I know that banks globally take this serious. Banking regulators like Bank of England and other banking regulators subjecting banks to stress tests to assess the health measures of the banks. From this insight, how should we carry out this? I know that Central Bank of Nigeria over time has said, oh, the banks are in good shape, but we will need to have more input or assessment of how robust and stable they are and what the processes results have brought out.
Again, I say thank you. But let me tell you, there's no magic wand, to having all the information the CBN or the other authorities should have to actually get to the heart of the level of the good health or otherwise of financial institution. For example, like I mentioned earlier on, a section of BOFIA, where they are talking about directors, managers, and officers who have interest in credit facilities.
Yeah.
Do you know that some of these arrangements are concluded in such a sophisticated manner that there's no way you will find out? It will be extremely difficult for you to find out that they have interest.
So sophisticated credit arrangements.
What I'm saying is that the officers who approve these facilities, right from directors, senior management and all that, you understand, even up to non-executive directors, like chairmen and other members of the board. Some of the organizations or companies that come for these facilities are fronts set up by these insiders. In many cases, if it is not so, and the entity coming for facility is entirely outside, the people inside, most of them still have this mindset of what is in it for me. So when these things are properly hidden, it becomes very difficult for the central bank and even other authorities to be able to find out the true state of things. Do you understand?
Yeah.
So going forward, yes, the CBN will make a general statement, looking at the general indicators as to the state of health of the institutions.
Yeah.
That's why I'm telling you, or I said, that going forward, the CBN has to practically be everywhere. That's why I use the word ubiquitous. You understand? So certain things have to go together. That is why the declaration of assets as required by EFCC is a masterstroke. So by the time somebody fills the asset declaration form and give to the EFCC, by the time they now keep updating it subsequently, you understand? So especially now, this day and age when every banking and every is digital, with BBN and others, you can always trace and follow any person's account and whatever to find out what money is coming in from where and how, and so on and so forth. So unless these entities, EFCC, CBN, and others, get to this granular stage, granular level of looking at people who are involved in banking, whether as directors, executive directors, senior management, and so on and so forth, not much. We won't get to know the true state of the health of these institutions. So what I'm saying here is to say that this is the way to go. There must be this serious collaboration by CBN, by EFCC, and such other agencies so that they can drill far deeper than what the CBN has been doing before now. You understand? Because things are getting sophisticated. Things are getting rough and tough. So the people who are involved, in banking, have to be subjected, to this kind of openness. They have to be opened up. You have to open them up, so to speak, so that you'll be able to deal with some kind of mindset, when it comes to either sabotaging the system or feathering their own nest, or what is the need for us mentality and so on and so forth. It is a thing that has been on in the system, and that is why many banks failed over the years. If you check well, you'll find out that why so many banks failed was this insider dealing, insider facilities, abuse, of the system, and so on and so forth. So the central bank really has to strengthen, whatever instrument it has in place and collaborate with the EFCC and others so that they can really come to close to knowing the true state of the health of the banks going forward. That's my recommendation.
Yes, Mr. Marcel, because prudential regulation is something we can't even joke with. I mean, in the Bank of England, we have what we call prudential regulation department, in which the current Bank of England governor, Mr. Andrew Bailey, was deputy governor prudential regulation of Bank of England before he became the substantive Bank of England governor. So, like you rightly said, prudential regulation must be taken seriously, and surveillance and measures in terms of particularly this insider dealings, because like I already said, in the 90s, with late General Sani Abacha taking out failed banks, they were jailed. I mean, then the Sanusi era, where the risk management approach was taken, and some banks again. So we must frontally take robust steps in addressing this, because it's really a huge concern. Not just the issue of First Bank, for every bank, this measure must be taken seriously to guarantee stability for the customers, depositors, and shareholders, and all stakeholders in general. One other area of concern is the non-performing loans ratio. And you agree with me, Mr. Marcel Okeke, the lessons from the past, the exposures, particularly to sectors like oil and gas, which really was part of the reasons why a lot of banks had challenges, the NPLs ratio. And even looking at the recent analysis from ProShare on First Bank, the debt experience and interventions by CBN, you could see that across all the banks, some of the banks assessed, those that have followed the threshold of Central Bank of Nigeria NPL of 5%, and not more than 7, 8. I mean, and that shows again the need for extensive work to be done in addressing the NPL ratios. From your perspective and assessment, you've been in the industry. What are the next steps that should be taken to ensure that these NPLs are addressed, and how do you see the role of AMCON now with the new bill by National Assembly in also addressing bad debts?
Well, thank you. Again, let me say this as a preamble. The latest policy of the EFCC that is asking for the assets of all bank employees, it will help in this direction. You understand? It's going to help because, like I said earlier on, you have most of the major facilities of banks. You find out that there is insider connection to most of them. So meaning that once the facilities go out and it now comes to servicing it or getting the money back, you begin to have problem. Because that been the issue from takeoff, from the beginning, from the packaging of the facility. Somebody in-house, whether it's non-executive director, executive director, senior management, is interested and has, in quotes, watered the ground all through, and the facility is given out. You understand? So from that day one, somehow that facility has in it, is embedded in it, the likelihood of going bad or not performing. You understand? Because of the interest of that person that is in-house. So this is the kind of thing you used to have. But now that assets are already declared, if NFU, that's the Financial Intelligence Unit, EFCC, CBN, working together, they'll be able to monitor these people effectively. You understand? They'll be able to monitor these people effectively. That is on one hand. On the other hand, let us now come to the issue with very open mind. You now look at the state of the economy. Yes, facilities, people who take facilities with a good intention to service it and pay back as at when due. If you have a situation like we had last year, which is still lingering, and that is the COVID-19 pandemic, which practically grounded the economy, what will these debtors do to be able to be servicing such loans? So certainly, that is what we translate in non-performing loans that we see in the books of banks. Okay? So, but we are believing that things will keep, improving. Like we already said that our economy is already out of recession by a slight, positive growth rate of last quarter 2020 of 0.11%. So we believe the first quarter of this year, we build on that. We believe that is when they bring out the, statistics from Bureau of Statistics. We believe, So, and if the entire business environment improves, because as you and I know, the level of insecurity in this land is affecting businesses, is affecting every economic agent. You understand? Negatively. Okay? So when there are these unforeseen development, the beneficiaries of these facilities are not magicians. So they are not going to do well. And the CBN is, on the other hand, compelling banks, in quote, pushing them to keep giving out facilities. And that is why you have the raising of the deposit...
loan to deposit ratio, LDR.
ratio,
Yeah.
being brought up to 65%. So it means the CBN is pushing them to keep giving out those facilities, and they keep giving out to meet those requirements. Some of them opt for being penalized by the CBN. That's to show you how serious it is. You understand? So if they now get exposed and keep giving out and all that, just to meet the regulatory requirement of the CBN, you can now see that they run the danger of being being between the deep blue sea and, is it the ocean and the deep blue sea or whatever. So whichever direction they go, either giving out more facilities, you are likely to have more non-performing loans, or not giving, and the CBN will penalize them on the other hand. So it's not going to be an easy situation. And you find out the pandemic, while to us here in Nigeria, it seems to be abetting and all that. In other places, becoming more ferocious. You understand? And Nigeria is not an island. That's why you have supply chain issues, that are yet to normalize. We have our trading partners and so on and so forth. So with all this, I am not so pessimistic that the NPL situation of the banks, will be getting much better soon. But they themselves will be doing everything they can, including managing their costs and whatever in-house. You understand? And then using whatever strategy to support the beneficiaries of such loans so that they are alive and going and be able to service those loans. They will do all that. But given what is on ground here in Nigeria and globally, I'm not celebrating that the NPL situation will be getting much better, especially this year. Let me not say in the long run, because anything can change in the long run. That's where I want to stop.
Thank you very, very much, Mr. Marcel Okeke. We would have had to discuss more about this, but that will be some other time. And it's very clear what you said. We must find a very clear way to address the issue of insider dealings, because it's been the cause of a perennial challenges of banking system stability. You've talked about the EFCC saying that bankers should declare their assets. But beyond that, the Central Bank of Nigeria, the NFIU, and EFCC must work around the clock to ensure that these issues are addressed. And of course, surveillance from the banking regulator on activities in the banks, working with all stakeholders, is very critical. And I dare say also that the Chartered Institute of Bankers of Nigeria also have a role to play, since they also are involved in the banking and financial services. Thank you once again for the time, Mr. Marcel Okeke, CEO Mascot Limited, and we hope that things will stabilize in the economy so we can have some improvement in the financial services industry activities. But we hope to have this conversation sometime again in the future. Thank you once again.
Thank you. Thank you for having me, Ambassador.
Thank you.
I wish you the very best. Thank you.
And that'll be all for this edition of the Economy and Politics Show. As you see, banking stability is very important for any financial market and, of course, the economy. You can log on to our website, www.proshareng.com, and click on our right-hand side. You'll see some of our interesting articles, particularly the recent one around the developments in one of the systemically important banks in Nigeria, the issues of stability, bad debt, and the way forward, and some other interesting articles around banking stability. Don't forget this period that you should stay safe. They call measures to stay safe and also be watchful in this period. That's a wrap. Thank you for watching and have a nice day.